It's making waves across financial circles today as news breaks out of China. China's largest fund, often dubbed as the BlackRock of China, has just thrown its hat into the ring by applying for a spot Bitcoin ETF in Hong Kong. Now, before we delve a bit deeper, let's rewind a bit. You might recall China's rollercoaster relationship with Bitcoin. Back in October of 2020, the country initiated a crackdown on crypto sales. By the following year, in 2021, this ban was in full swing. The State Council of China reinforced the ban, leading to the blocking of crypto exchanges on Chinese search engines and the prohibition of crypto mining activities. The impact was significant, with a noticeable drop in Bitcoin's hash rate as Chinese miners had to relocate their operations elsewhere. However, fast forward to today, and the landscape seems to be shifting. Despite the past animosity towards Bitcoin, major fund managers in China are finding ways to navigate around the ban. How? By turning their attention to Hong Kong. Yes, Hong Kong, with its unique status as a special administrative region of China, offers a legal workaround. While it operates under the one country, two systems principle, economically, it remains distinct from mainland China. This loophole allows Chinese companies to dip their toes into the Bitcoin market through their Hong Kong subsidiaries. Leading the charge is China's Southern Fund, boasting assets totaling over $284 billion. They've recently applied to launch a spot Bitcoin ETF. Not to be outdone, the Harvest Fund, managing a hefty $230 billion in assets, has also thrown their hat into the ring. Both funds have submitted their applications via their Hong Kong branches and are now eagerly awaiting regulatory approval. Now you might be wondering, why does this matter to you? Well, it signifies a significant shift in sentiment. Despite China's previous stance on Bitcoin, the interest from influential institutions speaks volumes. Approval of these Bitcoin ETF products could serve as a stamp of legitimacy both for Chinese regulators and investors alike. Now, the intrigue doesn't stop there. Over in China, local investors are making waves of their own. A frenzy had erupted around a gold stock ETF, pushing its premium up by a whopping 30% and forcing a halt in trading. It's a testament to the hunger for investments not tethered to the domestic economy or stock market. With American funds like BlackRock raking in profits, Chinese investors are asking, why should they miss out? It's been quite the kickoff to the trading week here in the US, especially for Bitcoin ETFs. The numbers are staggering, huge volumes pouring into these ETFs, signaling a significant surge in interest. Just take a look. BlackRock is sitting pretty at number 3 among all ETFs today, with ARK leading the charge ahead of even Fidelity and GBTC. And if that's not impressive enough, the latest update shows BlackRock boasting over $1 billion in trading volume alone. Now, let's dive a bit deeper into the dynamics here. Notice where BlackRock stands. Primarily as a buyer, contrasting sharply with Grayscale, which seems to be predominantly on the selling end. In fact, the contrast is stark. BlackRock's trading volume is over 3 times that of GBTC. This tells us a lot about the market sentiment and where the big players are placing their bets. But here's where it gets really interesting: the accumulation. BlackRock and Fidelity have been on an impressive streak, raking in cash for a whopping 59 consecutive days. That's right, day after day they've been pouring money into Bitcoin. They're in a league of their own when it comes to this active streak, setting records left and right. It's a testament to their confidence in the long-term prospects of Bitcoin despite any short-term fluctuations. Speaking of which, let's talk about recent price movements. Sure, there may have been a bit of a downturn or sideways action in recent weeks, but zoom out a bit and you'll see the bigger picture. After a brief breather, Bitcoin is once again showing its strength, marking the 8th consecutive monthly green candle. This is unexpected, a feat we haven't seen before. And you know what? It's not just happening here in the US. The BlackRocks and Fidelities of China are also eyeing their piece of the pie. They see the potential and the opportunity, and they're not about to miss out. So what's next? Keep an eye on mid-May. That's when US institutional investment managers are due to disclose their holdings for the first quarter. It's a momentous milestone for Coinbase as their Ethereum Layer 2 solution, or L2 solution, just soared past $4 billion in total value locked, or TVL. Here's the kicker. Their monthly transactions are outpacing both Ethereum and Arbitrum. Let that sink in for a moment. This Ethereum L2 by Coinbase doesn't even have its own token yet, but speculation is rife that an airdrop could be on the horizon. The numbers speak volumes. Coinbase's L2 now ranks as the third largest Ethereum L2 by TVL, leaving its fourth place competitor Blast trailing by a hefty $1.4 billion. Only Optimism and Arbitrum managed to edge ahead in terms of total value locked, but when it comes to transactions, Coinbase's L2 is leading the pack, outperforming Arbitrum and leaving the competition in the dust. So what's driving this surge? Look no further than the booming activity surrounding mCoin, with Coinbase's L2 emerging as a major player in this ecosystem. mCoin, spearheading the charge, has cemented its status within the Coinbase ecosystem. While we're on the topic of cryptocurrency news, let's pivot to Cardano, but first, a shout out to Polkadot, which is making waves of its own. Despite recent attempts to stir up attention with meme coins falling short, Polkadot is thriving. In fact, active addresses on the platform have just soared past the 600,000 mark, a record-breaking feat. It's a testament to Polkadot's fundamental strength and resilience in the face of market volatility. But here's the real kicker. A whopping 41% of these active addresses, totaling 248,000, can be attributed to Moonbeam, the cross-chain smart contract platform that's been making waves in the ecosystem. Meanwhile, 191,000 addresses were created directly on Polkadot itself. Now, regardless of where they originate, these active addresses are a testament to Polkadot's growing ecosystem and its ability to attract users from all corners of the crypto world. And it's not just active addresses that are trending upward. Other fundamental metrics are following suit, painting a promising picture for the future of Polkadot. Let's dive into the latest buzz surrounding Taboo, a lower cap altcoin making waves in the cryptocurrency world. They're not just any run-of-the-mill project. Taboo is spearheading crypto entertainment with a futuristic marketplace and a revamped roadmap aimed at global mass adoption. Now, Taboo has earned itself quite the reputation as the #1 adult entertainment crypto on the blockchain. Some even liken them to the Playboy of crypto, blending sophistication with a dash of sensuality, but let's set the record straight. Taboo wasn't just about titillation, carving out a niche as an exclusive premium brand. Think of them as the OnlyFans or an upscale club on the blockchain, if you will. At the heart of Taboo's vision lies a robust content distribution platform seamlessly woven into their marketplace. But what sets Taboo apart from the crowd? Well, for starters, they're not just about digital content. Taboo goes above and beyond, offering exclusive opportunities for hodlers to attend lavish mansion events. Moving on, it seems like Cardano founder Charles Hoskinson is once again in the spotlight, shedding light on two major upgrades amidst the FUD swirling around Cardano. In response to a controversial video claiming Cardano's demise, Hoskinson took the high road, expressing his well wishes for the individual behind the video. But let's put the drama aside and focus on the real meat of the matter, the upgrades. First up, we have the highly anticipated Chang hard fork, slated for this year. This upgrade is touted as one of Cardano's most significant since 2022. And what's in store? Well, get ready for the introduction of community-run governance to the blockchain. This means hodlers will have the power to participate in on-chain community consensus using their tokens to vote on proposals. It's a move towards full decentralization, empowering the community to shape the future of Cardano. But that's not all. The second upgrade on the horizon is Ouroboros Leos, a new version of the proof-of-stake consensus model. Designed to enhance throughput, scalability, and transaction speed on Cardano without compromising decentralization. If you're a Cardano enthusiast, these upgrades are definitely something to look forward to. Now, shifting gears to some exciting news in the AI crypto realm. Rainmaker. What's Rainmaker all about? Well, their AI application allows users to generate art, train stable diffusion models, and even run mobile deep and validator nodes. It's a fascinating intersection of AI and crypto, with their CEO leading the charge. And here's the kicker. The Rainmaker app is already live, boasting over 70,000 downloads on Google Play and iOS. It's a testament to their traction in the market and the potential for AI-powered crypto solutions. But there's more. Rainmaker has launched a new quest, offering users the chance to farm coins by training their AI-generated dream art of none other than Elon Musk. It's a fun and engaging way to get involved in the world of AI and crypto. Anyhow, that does it for today's video. I hope you've had a good time. I'll see you tomorrow. Have a wonderful day and a safe one.